One more results from the cement universe. This time around it was Shree Cement, and Shree Cement 2 did not disappoint the street. In fact, if you're talking about the street expectations, Shree Cement 2 has managed to comfortably outpace the expectations that the industry as well as the analyst community had for the entire earnings. Now, when you're talking about this particular set of results, Shree Cement reported EBITDA for the quarter at close to 990 crore, almost higher by 17% on a year-on-year basis, and almost a 20% beat as far as the consensus estimate was concerned. Beat was mainly led by higher EBITDA per ton, and this is on account of the fact that the company enjoyed higher realizations and also marginally lower per cost ton both, and this is again both when you're comparing it to estimates by the street or by consensus. Volumes grew almost 14% on a year-on-year basis. 6.5 million tons is what the company managed to deliver, or the offtake was almost 6.5 million tons. This was in line with what the street was anticipating, again clearly showing that the kind of bounce back that our companies have seen in terms of cement offtake post the lockdown. Now, when you're talking about the consolidated EBITDA was impacted on a negative basis on the back of the fact that the Middle East subsidiary did put up a slightly subdued show. When you're talking about the blended realization, down almost 2% on a sequential basis, and the blended realization came in at 4,628 versus an expectation of a 5% decline. So again, it has beaten street estimates, but still there was a decline on a sequential basis. This is on the back of the fact that regional mix as well as better than expected trade realization is something that has actually helped realizations inch up further. Cost per ton at 3,115 was lower than anticipated. The key surprise positively was the low power and fuel cost that the company managed to actually enjoy, and the power and fuel cost actually declined almost 30% on a year-on-year basis. Low freight cost also was helped by reduction in lead distance as demand recovery for the company actually got broad-based. Now, Macquarie, has actually come out with a note. They've maintained their positive stance or the outperform rating. They've kept the target price at close to 25,259. They believe that the numbers were a 20% beat on their as well as consensus estimates. They believe the higher EBITDA per ton as well as the higher realization and marginally lower cost per ton is something that is actually been quite positive. What they are waiting for at this point of time is that they would be looking into the analyst conference call, and after that they would actually be changing their recommendation if there are any changes to be required. Now, what they're saying is that the cost per ton was almost significantly lower than anticipated. And remember, Shree Cement actually uses a very high amount of petcoke as far as their fuel mix is concerned. And if the company manages to sustain this particular lower cost, company can enjoy extended margins. This is what most of the analysts on the street are also communicating to their clients.